Hey guys, Dan MacArthur here. We just got the stats package back from the Fraser Valley Real Estate Board, and I wanted to hop into that with you and kind of go through what the numbers are saying. I mean, I think across, Chilliwack, Abbotsford, Langley, out into Greater Vancouver, from my agents and brokers I know through the valley, we've been kind of seeing the market recover. You hear about multiple offers happening again here and there. It feels like on all of our listings, we're seeing more showings, more potential offers, more interest. And that sort of, I guess, return to a bullish real estate market is starting to be reflected in the numbers, and I just wanted to pop into the numbers and again show you what we're seeing there as well as speak to what I'm seeing anecdotally. So enough rambling, let's get into the numbers. So the HPI index, we're starting to see a bit of recovery. So across all property classes, it feels like we bottomed out somewhere in January, right around 942 for all property classes, and we've seen gradual appreciation since then. Detached homes, they all kind of follow that same suit. So bottom in January at 1,357,000, almost up to 1.4 again now. Apartments, we bottomed out right around 500,000 again across all of the Fraser Valley, and then we're right around 521,000, so about a $20,000 appreciation from January. Townhouses follows a similar sort of appreciation trend, 773,000 in January up to 794,000 in March. Homes with acreage, I can't really look at because the numbers get too crazy, because you're looking at maybe a 3-acre home with a home from the the 30s on it, and then a brand new estate property. So we won't even look at those numbers. Median and average prices follow the same trend, so it's not just crazy wizardry with numbers with the HPI index. The actual median and averages are following those trends as well. So yeah, it's sort of indicative of prices recovering. But one thing that's always interesting to me is to look at the sales to actives ratio. Like I've always said before, if you were to drop me off in Boston or a market, a real estate market I had no sort of context for, the first thing I would do would be to look at the HPI index. Then I would probably look at the median price, and then I would look at the sales to actives to figure out, what's going on in this market. Is it going up? Is it going down? And who's being favored? And why I like the sales to actives is it's kind of the first leader. So if we go back, looking at the monthly data for all property types. So we kind of see the sales to actives, we have a really, really strong market at the beginning of 2020 where we're seeing, between 60 and 50% absorption through March. And then the rug just gets kind of pulled out from under it, and it falls dramatically all the way down to 18.5% by June, which is what the board defines as a balanced market. Again, speaking with agents and my partner Caleb, we kind of feel that 18% absorption is more like a buyer's market. Definitely feels slower. Again, that's only basically 2 out of 10 homes getting bought up month over month. So it does feel like a buyer's market to us, especially out here in the Lower Mainland when we see absorption at 18%. I'd say around 25% to 30% feels balanced, and above that we start to feel like it's a seller's market. So what's been interesting is as we sort of see as we've gone through this market, we're now seeing a huge jump in the sales to actives ratio. So that's pretty considerable. In February we kind of flatlined all the way through July to January. In February we're at 21%, and now we're right around 40% absorption month over month. So looking at that, and I built a little graphic I wanted to share with you, which is kind of fun to look at. This took me like 20 minutes to build, so even if you don't like it, please be nice, okay? So if we're looking at the HPI pricing index, I've mapped that out in green here. So starting in January, we see it go up, and then of course we see the sales to actives really, really high then as well. And then we see this big fall in the sales to actives. And then looking at price doesn't respond as quickly as the sales to actives goes down. And then we hit this sort of flat line, and then price sort of follows us down until we kind of, cross somewhere in January. And now we're seeing, a big spike in the sales to actives ratio. And then we're seeing moderate appreciation. But I think that's what's driving our prices are starting to appreciate again. I think that's what's driving some of the multiple offer situations that we're seeing. Again, across the whole market, it's nothing like it was last year. It's still a good market to buy in my opinion. You're not competing like you were. I mean, it was gross where there was, 15 offers, 20 offers. You couldn't have a subject to, you couldn't have a subject to inspection. You couldn't have subject to financing, which are the two, scariest ones for us as buyer's agents, for our buyers not to put forward. I mean, those are the biggest threats, and we could do this in another video when we talk about the rescission period that's been affected. Maybe I'll do that next week. But yeah, it's that sucks. You can still likely get into situations where you're able to do your diligence, but we are starting to see the market transact more quickly. I think if we don't see another interest rate hike, we're supposed to get an announcement on April 12th whether or not they're going to raise interest rates again. If we don't get another hike, which I don't think we will, we could see moderate appreciation through the balance of 2023 with more transactions happening. But anyway, guys, that's my 2 cents. I hope you enjoyed this video. If you have any questions for me or just want to talk real estate, feel free to give me a call anytime. Yeah, thanks for watching. Bye.